Good afternoon, everybody. Welcome to the Trainer Merlin Show. It is your Thursday afternoon, Jimmy Carter Day today. Oops, we got to get that damn camera fixed. A little messy over here. There we go. Fix my camera up a little bit. Hope you're doing well. It was a great day today, at least because it was no wind. And hopefully those Palisades fires, the San Diego fires, all these valley fires, the firemen can get that together and put those things out, because it's pretty tragic watching all that's going down right now. So hope everyone else is safe out there. I'm totally fine where I'm at, knock on wood, but some people definitely are not. Got hundreds of thousands of people displaced, and do whatever you can to help. So I'm a little bit late with this one because I haven't had time to do like a super deep dive. So I kind of did a high-level review of my trading, and I compared it to last year. And I'm one that puts myself in the camp of, you need to do this every single year in your trading, is sit down, look at the numbers, break it apart, find out what worked, what didn't work, what your strengths, weaknesses are, and all that stuff. And then ultimately figure out how you're going to make next year even better. And having done this since 1996, I mean, I feel like I really have a long track record here. I still go through this process, and I will do it until the day I die or cease trading. So hopefully it's a learning lesson for you as well. Somebody says, Steve says, I heard there was a fire started in someone's backyard. It could easily be. I mean, if you had a barbecue with coals, little ember, and you have a 50-mile-an-hour wind, that coal can easily fly 30, 40, 50 feet and ignite something next door. So all these people are, pointing the finger at this, that, the other thing. Look, when you have high winds like we had, I mean, there were Category 3 hurricane force winds out here in Southern California, which was like 100 miles an hour. It doesn't matter. You could throw a cigarette butt and it could fly 100 feet and catch something on fire. So really it could start of anywhere. Hopefully it's natural, not some psychopath who's just starting fires just to watch it burn. But unfortunately, it's a lot of really beautiful homes and a lot of people displaced, and most importantly, loss of life in the process, and animals and humans. And so it was just really, really, really tragic. So terrible thing. So let's go into our trade review for 2024. Now, I'm hoping that you've all done this. I'm hoping that this is like, you're late. You're like, Merlin, you're late. You should have done this weeks ago. Well, I could have done it weeks ago because it's only been about a week since we've been in the new year. But hopefully you've all done this type of process. And when I talk about trade review, there's quite a few different things. There's a lot of different data that I'm trying to look at. And unfortunately, I'm a little scattered. And you'll see here when I get to my changes for 2025, I've tried to rein in some of my accounts, meaning they've been all over the place, and I just try to whittle them down and bring them back down into a smaller, more manageable piece. So we'll talk about my 2024 breakdown. It's really about analyzing tons and tons and tons of data. No, this is not my workstation. I think that this is a bit too pretentious. I don't use 6 monitors. I have looked at 6 monitor setups before at Trading Academy. We actually have one to broadcast some classes, nice 6 monitor setup, but I actually do 3, and I have had questions in the past about what your trading setup looks like, so maybe in the future I'll do a show on that again, where I talk about my computer setup. Bet on water stocks, Merlin? Yeah, bet on water stocks. We've been talking about that for a long time. There was a trade show I did years ago for, I think it was in Las Vegas Money Show, and one of the things they were showcasing was water stocks. And they kind of painted this picture like it's going to come down to a Mad Max type of scenario. Remember, Mad Max was all about the gas, and people run out of gas, and that was the commodity. At some point in the future, it'll be water. I think the new Mad Max, Fury Road, is actually about water and the water shortages. Maybe foreshadowing what's to come. So let me... I actually have these out of order. I want to start with what didn't work with regards to my trading. So I was going to start with what worked. Let's go with what didn't work, because I think that that's more important. So here is what didn't work. And I'll break down the numbers and give you I just have high level. I'm not going to go in too much in the weeds here. Last year, my worst performing account was down 54%. I had a 54% drawdown, and I had 2 accounts earmarked as gamble accounts. Now, in these 2 gamble accounts, I have free reign to do anything that I want to do. I can break my rules. I can add to losses. I can double down. I can do anything. There are no rules whatsoever in those 2 gamble accounts. Now, the good news is those gamble accounts are relatively small. Together combined in last year, they were $30,000 was what I started with in those accounts. At the end of the year, those 2 accounts were down to about 14,000. And I'll call it 15,000. So there had been a significant drawdown in those accounts from 30 down to 50. So one account was down 54%, one account was down 28 last year. And I had told myself that I would kind of rein it in a little bit with that gamble account. Part of us wants to have that ability to just go nuts and do whatever the heck we want to do and take a flyer or buy some penny stock or whatever. I told myself I was going to make a change and shrink that down this year. And I did. I shrunk it from $30,000 and I broke that down into a $10,000 account. And conveniently, what do you guys think was my worst account this year? It was the gamble account again. In that gamble account, I only made 4 trades for the entire year. Can anybody here guess what those 4 trades were? We talked about this market quite a bit, and I will definitely say it was catching a falling knife. I violated one of my principal rules that I tell you guys to do all the time, particularly when we look at different leveraged instruments. So I'll tell you this. It was a leveraged instrument, and on that leveraged instrument, I just kept adding to the position. I kept adding as it went down and more and more and more. So that was not a good thing. I'm just waiting to see if you guys can type in what it was. No, silver was good. Silver's not really that volatile. I mean, I think you'd have a hard time losing 35% on short positions, on silver. So it was exactly 35% decline. I didn't buy the SPX. Nope. There you go, Mammon. Got it. Wow, you nailed it. Boyle. So most of those trades, I did a trade early on in the year on Boyle, and you can see that Boyle just like free falled. Of course, it did split since then, but I went long on Boyle, which is a leveraged long natural gas. And I believe, I didn't even catch this whole move. It was down in here as we bottomed out at some point in July. I think it was July. I ended up just kind of going long a bunch of BOIL, and it just started to rip against me, and then I added more to it, and then I finally closed it out for a loss. And then back here in September, as it started to rally up in that gamble account, I went long on Boyle again, thinking this is it, here we go. And then it just ended up falling again. So out of 4 trades for Boyle, I had 3 losers. And I had 1 little winner at the end, which was kind of nice, which was redeeming. But, that's a 75% failure rate, only 25% success. Now, like I said, the good news for me is that was by far my smallest account, so it didn't have too big of an impact. So I was okay there. No worries, Tofu, you're here now. Last year, my best performing account was an options account that I could kind of do what I wanted to do with, but I did have some rules, and I only sold options in there. So I have consolidated down. So now I've got one very large account that I do a 1% strategy, which we'll talk about here in just a second. And then, I have one main one, and then I have a smaller one. So I guess I have 2 1% accounts. So in those 2 1% accounts, one of them is kind of small, and the other one is pretty darn large. That was what I was focusing on last year. And last year, that account was 11.12% for the 1% account, which I thought was okay. It got me just under 1% per month last year. This year, I got 19.09 in the smaller of my 1% accounts. And in my larger one, I got 23.97. Just better timing, I guess. Now, what's noteworthy for me from an analysis perspective, and I guess now we're into kind of what did work for 2024, was the 1% account consistency is what really kind of blows me away. Not blows me away, but makes me feel very comfortable with what I was doing. Last year, I went 57-1 in my smaller 1% account, and I got an 11.29% rate of return. This year, I went 57-1 again. So 57 trades. Crazy. Both years in a row in this 1% account. Must be doing something right. At least I'm consistent, I guess. And this year was 19.05% gain in the smaller 1% account. And in my larger 1% account, I went 22 trades, 1 loss, which is 95% success ratio. Now, I think selling options is a little bit different. I don't want people to think that I'm hitting it every single time, because as you're making trades in the equity markets, it can be hard sometimes to be consistent. As a seller of options, I found my consistency level is far better than it was. And, part of it is, to be fair, some of these trades I would sell puts against, a major index like SPY or QQQ. Typically it's indexes or, broad market indexes or ETFs. And if I was exercised, I would be selling calls against that at the strike price I was put at, and ultimately at time, because we're in a bullish market, it would rally back up to my price or higher, therefore not a losing trade. Not to say I wasn't in a losing trade over a certain window of time. But those two 1% accounts for 2024, if I look at the stats here, let me make it a little bit clearer. If I look at the numbers, my average there out of 79 trades, I had 79 trades and 2 losses. Pretty good. And I would say when you look at what worked, for me, this is exceptional. I think that having that kind of success rate really does a lot to your ego and your confidence. It makes you feel like you're almost indestructible when you kind of, when you're in the 90% rate of success. It's great. Now, if I was trading just stocks or futures, I don't think I would have that kind of success. It was my ability to sell calls against positions that I was losing on in a bull market. So, you could chalk up these last 2 years to a little bit of luck on that. So once I was exercised in markets that were bullish, great, I'll sell covered calls. And I was fortunate there to have such a great success ratio. In one account, I went 22 trades, 1 loss, which is 95%. And in the other one, I went 57 and 1, which is 98%. So for me, it was great. Lori says, Merlin, in each trade, how many contracts do you take each time? There's nothing definitive, right? I could put all of it into one. So, depending on the size of the account, I'm not disclosing account sizes here just for personal reasons. Maybe someday we will do that in like a mentorship program or something. I don't know. But I don't have a limit on how many contracts. It could be, 1 upwards. The most I was in at any one moment. And again, this is misleading because I could be in, 30 contracts of something like SMCI, or I could be in 60 of SLV and not really have a lot on the line. Some of the ETFs I was trading are pretty expensive. If you look at the list of ETFs over here, I'll bring it up for you. We were looking at things like SPY and QQQ. Those are $500 ETFs. So those might be 2, 3, 4, 5 at a time. Whereas with SLV, I could be in, 60 or 70 at a time. I will tell you that one of the changes I kind of started to subconsciously make this year, even though I love silver, the cost for me to trade silver gets higher with options because the price of SLV is so cheap. I have to buy or sell a ton of options to tie up a lot of capital. Obviously, my goal is to deploy my capital and put it to use. So I'm always trying to have my capital working. I'd rather it not just sit there in an account and do nothing. So I'm going to find something to do with it. If SLV is trading, let's say at $20, let's bring it up here. Okay, so let's say SLV right now is at $27 and SPY is at 50, call it $590. I could technically trade 20 SLVs, which equals 1 SPY as a capital outlay. So my costs go down significantly if I'm trading the more expensive ETFs, which I have been trying to do a lot of. I did a bunch of trades in XLE, XLF as well, which is only $50 or $48. Is that one of your account at risk or yes? So Jamie, I am putting it all at risk. And again, there's times like right now I have some of it sitting on the sidelines waiting for a little bit more of a sell-off here before I jump in. But typically I'm trying to have it all in the market and I'm trying not to use leverage either. So in my 1% accounts, I don't use leverage. I don't want leverage. I want to go just off the number, which is why I'm getting lower rates of return. In my other options account, so I have the aggressive options account, which I mentioned, and I consolidated a couple accounts this year so I can have more to trade within this account. In my aggressive account, which I've been talking to you guys about trading things like MicroStrategy and SMCI, and back when we had big drops in some of these other markets like Tesla and Amazon this year and Google, that was in this aggressive options account. So mind you, my biggest account's a 1% account, and that is I can only do diversified ETFs or SLV, and I can't use leverage. In my aggressive account, with options, I can trade individual, and that's why I think got the much higher rate of return. This year, I had 42 trades, 2 losses, which does equate to a 95% win ratio, and I had a 61.29% rate of return in that account. So, right off the bat, not bad, right? Now, here's the kicker. I think that most people in their accounts, if you got a 19.05% rate of return, you'd probably be going, well, that's not bad, right? You did pretty well. Well, let's look at what the SPY did this year. And I will start this, that's from January, the first day of January, and we will go to the close of the year. It's not that great. Let's see, what date is this one? That is December 30th. Let's go one sec, because I get it over to the appropriate date. And that's December 31st. I think that was a down day. Yeah, so there we go. So the market for the year, SPY, is looking at up 24%. So while I did well for myself, and I think by all metrics, that number in my account was great. I'm very happy with the 19.05%. Of course, if I can annualize this, I'm going to be blowing the doors off the markets on a compounding basis. And especially having a 57-1 win-loss ratio, fantastic. However, it didn't beat the market. Right? I think for most people here, you would look at those numbers and go, man, you're crushing it. Now, the rate of return wasn't very high, but remember, in those accounts, my goal is not to take a lot of risk. I had a conversation last weekend when I was doing this conference in North Carolina, which I had a ton of fun at, and I was on a panel discussion about if you could go back and tell your younger self something, what would it be? And my comment, after I went through the whole panel with Brock Pierce and Mark Schlichting and Kayla Albman and Larry Jacobson, it was great. It was honestly just so much fun having everybody up there. But after I listened to them, my comment was, listen to what these people are telling you. They're trying to help you succeed at your trading. And then I went, it's a bit different because it was a young lady that was, I don't know, she's probably in her 20s, maybe mid-20s. And I go, it's much different when you're in your mid-20s. Because when I was in my mid-20s, I didn't have any money and I was taking really aggressive chances. It's just, I guess, what you do when you're younger. And now that I'm older and I have money, I'm taking a lot less chances, right? So when I'm in my 20s, I'm trying to get that 50, 60, 80, 100% rate of return. As I'm, getting older here, it's like, hey, if I can beat the market and get more than 8% annual per year, I'm doing great. But when you benchmark yourself against a market that had 24% gain last year and you underperform that, even at 19, which is by all means great, it's frustrating, and I'm always wary of coming on the show here and getting backlash or feedback from people going, oh, well, you suck at trading because you should have just bought SPY and made 24%. You worked hard all year, had great numbers, but you still only got 19. Well, that's true. However, I have multiple accounts now, and my aggressive options account is the one I'm really interested in, which was up 61.29%. I'll be looking to continue to work more in that account. I don't think I'm going to put any more capital in there, but I will just continue to focus on that account as being the primary number to bring it up. Now, what I'm hoping happens, actually, let me get through all this before I talk about what I think happens or hope happens. I wish you could be a great trader today, and I tell them to become mentors too. Dago, nice. What kind of leverage do you use? Margin. I don't use in my 1% accounts. I use absolute goose egg, and then in my aggressive one, maximum 2-to-1. Maximum 2-to-1. Now remember, options are leveraged inherently as is, but if I'm doing a covered call, actually let's start again. If I'm doing a cash secured put, right? And let's just go out here and let's just bring up SPY for example. So if let's say I decide to sell a cash secured put, and right now we're looking at 589 on the SPY, and let's say I do that at 580. I'll put that line right here so you guys can all see that. 580, oops. 580. Okay. So there is your 580 line. If I'm selling puts at that 580 line, obviously I'm trying to collect some premium. Ideally, it's going to be 1% or more. But I know that if I get exercise, I'm on the hook for $58,000. So if I have a $60,000 account, I know I can only sell one of these in that 1% account. In my aggressive account, I can go 2-to-1. But I definitely don't want to extend that. I don't want to go past those thresholds. I've gotten to the point now where I don't care about grand slams. I love when I hit them. I love when I hit one in a trade that you just knock out of the park. You're like, man, that was awesome. Like last Friday was an out of the park kind of trade. I just did not expect it to have happen. Kicked my year off to a good start, but it's not what I wasn't trying to hit that home run. I'm a base hitter all day long, and I will continue to be so no matter what anybody tells me. I found what works for me. I'd rather take low risk trades that have a higher probability. At the end of the day, and when I look down my sheet here, I do have one account that I'm not happy with the performance of it. I only had a 61% win ratio outside of the gamble account. Let's see. Let me keep going through here. Lisa G, is your aggressive account different than your gambling account? Yes, totally different. So my aggressive account, great question, Lisa. I've got these two big 1% accounts that are, I'll call them the conservative accounts. Those are no leverage, sticking primarily to indexes or broad market ETFs, sector ETFs. No individual stuff. Then I have a fairly large account that is aggressive options, where I do the same thing I do in the 1% account, but I'm typically doing that with the volatile stuff like MicroStrategy, SMCI, or something that's an earnings play that's down massive because the premium's so large. I'll be playing those on companies, by the way, that I'm okay to hold. We talked about this last year. I was doing this with the Amazon earnings and the Google earnings and Tesla earnings as well. When there's just those colossal shots down of a company that I'm okay owning long term, I'm fine. I'm okay to hold it losing for a little while. I'll just keep selling calls against it, and it'll, over time in a bull market, it'll come back. Remember, this has all worked because it's been a bull market. If we get a scenario where this market doesn't have legs and all of a sudden you're left holding a losing position for months, maybe years, these numbers might change. So we'll see. We'll see. I don't think I understand leverage. I can only sell cash secured puts with the money I have in my account. I can go past that number for some reason. I'm not sure why that is, but I don't use a lot of it. Typically, I'm not fully leveraged. Okay, so when I say I definitely go past the cash balance in my account, and they let me do that. So I've done that, but I don't go heavy with margin in those accounts. Now, let's go to the gamble account. The gamble account is anything. Doesn't matter what it is, asset class, commodity. I mean, I could go all in on penny stocks. And for the past 3 years, that account, there were 2 of them last year and 1 account this year, they've all lost money. So I think the learning lesson there for me is quit it with the gambling. It's hard. I want to have a location, and this is why I have the gamble account. And maybe I just stop resetting it. Like right now, that account has dropped 35% this year. I should just leave it at that and never add to that account. I like to add to numbers to make them an even number so I can kind of have an easy reference for the percentage rates of return at the end of the year. We'll get to my changes here for 2020. With margin, you use more. I'm using more money than I have. So if I have, let's say, $500,000 in an account, I may be using $600,000 or $700,000, which is using borrowed money from those firms. Let's see, what else do I have here? In my experience, Grand Slams only happen when you're not trying for them. Yeah, I agree, Steve. I think the same thing. And it seems like, let's flip it, because what's more important, getting the Grand Slam or striking out a lot? When you are trying for the Grand Slam, you're trying to get that, 6x, 10x, 100x winner, that's usually, you'll never find it. It just happens by luck sometimes. And, I've always made the comparison to baseball because I think it's a legitimate one. Your goal as a baseball player should not be to hit a double, a triple, a home run, or anything else. Your job should just be to get to that first base. That's it. Don't think of anything else in the game. It doesn't matter. If you strike out, you're not getting to that base. If you walk, you're getting to that base. If you get a base hit, you're getting to that. And then you can score potentially. But your job is just to get to first base. And I think that's kind of how I've focused my trading has been, let's just get to first base. Forget about the doubles. And granted, when I was in my 20s, all I thought about was Grand Slams, home runs, and you swing for the fences. And then you strike out so much in that mindset that ultimately what happens is your ego just gets crushed. Your ego just absolutely gets crushed, and yeah, not good. Let's see. Long to see. Hey, Steve, good to see you. Way back when. Good to have you back. I'm trying to get base hits. As you should. I'm hoping that's something that you guys get from this program, that it's not about making tons of money, but it's about being consistent and making money. This year, I eked out an average that was better than the market, and we'll get to that total return here in a second. So I've talked about my two kind of larger 1% conservative accounts. I got my 1% aggressive account. I talked about my gamble accounts. Now I'll talk about my futures accounts. So grouping those together because I just have them in different places, but same strategy each place. Not the best, but this is kind of in line with historical norms. I had 23 trades taken in my futures accounts, so not a lot. 9 of those were losers, so that's a 61% success rate. Not bad. That was okay. And I unfortunately don't have a ton of money in my futures accounts. I got a good amount, but it's not like I'm in the hundreds of thousands. I don't have that much in futures. 33% rate of return, which I thought was okay. I'm happy with that because it beat the market. But, I look over at the 61%, and yes, I'm better than 50-50, but it just feels like it's not that good, right? To have 23 trades and 9 of those are losing trades. I don't know. For me personally, it just feels like it's a little disappointing, even though at the end of the day, what matters is the rate of return. Made 33%. I'm okay with that. So, Larry's, I'm very happy with base hits. All right. And it's less stressful too, guys, when you get base hits. It just boom. And we'll get to something that I think I have it in here. Let's see, the key takeaways. So in looking at what worked, the things that I really, I guess maybe not what worked. What worked was my strategy. I just really kind of had an overall conservative approach with a bulk of my capital. So if you take a pie chart of all of my assets in the financial market in trading, and by the way, none of this includes crypto. So when I talk about the rate of return, none of that includes crypto. My crypto portfolio was up, I think, 94% for the year. That's not included in any of these calculations. We're leaving that one totally alone. So my approach has been, I'm trying to be more conservative with it all. Just in case I want to go crazy, I have that gamble account. The futures, I'm generally doing SPY. I might do some NQs, maybe some ruts. Occasionally, I will dabble with crude oil. But as you can tell, I didn't make a lot of trades. 23 trades for the year. That's less than 2 a month. That's very low compared to my historical norms. Very, very low. So at the end of the day, when we look at kind of these big buckets, the future side of things, my gamble accounts, my 2 conservative options, and my 1 big aggressive option, ended the year with 148 trades. Last year I did 188. So last year I did 188 trades with 34 losses, and that was an 82% success ratio. This year, because I think I've scaled back on my active equity and futures trades, I had 148 trades total, only 16 losers, and that was a win rate of 89%. But what matters most was the rate of return. Now, it wasn't glorious. Obviously, we'd love to have triple-digit rates of return, as a lot of social media influencers are boasting about. Then I could cherry pick my account here and say, oh, my rate of return was 61.29%. That was for one account. When you average all the accounts in, ended up with a 30.04% rate of return, which is about 6% higher than the market. And for that, I'm happy with it. I don't feel like I took a lot of risks this year. I feel like I was relatively conservative, and I beat the market at its game. And so for me, I call that a net win. Let's see. Jeff says, hey, Jeff, good to see you. OJ says, when you can make 4 a day, get those numbers. But contracts are small, 1 to 5 contracts each. I usually have 20 plus trades per week. Wow. And again, to each their own. I'm not trying to sway anyone here or say you got to trade like me. I'm just trying to be as transparent as I can and share information that I hope you learn from. My goals have certainly changed over the years, and as you get enough capital, you don't need to take chances. What I don't want is I don't want to see, a year when all of a sudden my accounts are down 30 or 40%. And that's unacceptable to me. So, if we finish this year, and my forecast is for a down year, I know you guys are probably not going to want to hear that, but I will bring the list here. Here's our list. And if you go to December, SPX was 55.81. My forecast is down about 2.52% for the year. Now, that's for the market. I certainly don't want my accounts negative for the year. If the market's down 2.52% at the end of December and my accounts are up, 5-6%, I'm calling that a win. And a lot of people will badmouth that and oh, no, that's not right. No, well, as long as I'm beating the S&P, I feel like I'm winning, and I certainly don't want to take a negative. So if I have anything above zero in a negative year, I call that a victory, and I think you guys should as well. Now, I have everybody's numbers tabulated here, so if you don't see it, let me know. We can throw you in here, and there you go. So let's go into the last part here. Let's see, make sure I got everything done here. So that was what worked. And now let me go into my changes for 2025. So for 2025, I'm going to consolidate down a little bit more of the accounts. I think I may combine these two 1% accounts. I'm not sure. I have these conservative accounts that are large and separate, and I kind of keep them because of a risk management perspective at different brokerage firms and separate, just because I don't trust these financial firms. The gamble account. I'm not going to add anything to the gamble account this year. I'll keep it. If it slowly dwindles to zero, then that should be a lesson to me. As far as going back through my trades and saying, what am I going to do differently for 2025? I'll be honest, I don't think I'm going to do anything really different. I didn't take any really big losers. The only thing that really hurt me bad was Boyle. Boyle took some money away, so fine. We'll just make a note. And, you should never hold a leverage ETF long term. I did hold these things for a couple of months, and that definitely had an impact on me. So I will probably consolidate some of my accounts down a little bit. I no longer have a spot Forex account, so I closed that one out and moved that capital over. I imagine I will probably keep things the way they are, where I have conservative approach is for a bulk of the capital because I'd rather slowly grow it. I really am enjoying and having fun on the aggressive side with options, and that has not come back to bite me yet. Knock on something, because who knows what 2025 holds. But if I can achieve that same rate of return that I got last year, 2024, for this year, I'll be very proud and very happy with myself. Anytime I can get into the 60% rate of return mark and do that consistently, you're doing something right. So I'm not going to change anything with that account. Looking at, I really don't see anything that I need to change for this year. I'm still not going to trade Apple. I'm still not going to trade biotechs or pharmaceuticals. I'm still not going to trade Cisco. Those are things that have been blacklisted for me, and I won't be able to trade those. And just it's a matter of personal preference. We're going to approach a year here that's very volatile. Trump, from his last administration, created a ton of short-term volatile swings with the markets, and I think that's going to be a little bit more of a challenge than we experienced over the last few years with Biden. It was somewhat consistent, and whether you loved him or hate him, it wasn't the most exciting market time other than uptrend for the past few years, and I think that may come to an end here. Don't gamble on Apple in 2025, even though your luck may change. Nope, I can't trade Apple anyway. Realistically, what do hedge funds get for returns? Realistically, hedge funds don't beat the market. Hedge funds don't beat the market. So, they do not beat the market historically. So, dig them up. There's the individual who I can't stand, who I think is a total scumbag and lives in Chicago and doesn't do much with his school anymore because, that's failing as well. He is now running a hedge fund, which is completely ironic when you look at the results that the FTC investigated him and said he doesn't make money trading. The guy is now running a hedge fund. I wish I knew the name of his hedge fund so I could see and put it on blast on social media, because my guess is it's probably not beating the market either. Let's see, what else we got? I do have 30 to 40 positions on stocks I continuously sell calls against. Right, and Steve, what I would do in that situation is that would be one account with one objective, right? I wouldn't have it in multiple accounts. That way, I'd want to keep that strategy where I'm long stocks, selling covered calls against it, right? And measure your rates of return for that year. Now, what I would do there as well is I would do mark-to-market accounting, so I would know that the account, even if I have open positions, how much am I up or down in that position, and I would use that value as the value to start the new year. A lot of times people are not doing mark-to-market accounting because, I still have a position open, therefore I haven't realized that gain or loss. Mark-to-market accounting says at the end of the year, this is its value. That's your basis for the new year starting. Jeff says VIX is only 18. 18 is kind of high compared to what we've seen over the last couple of years, but historically, the VIX indicator, if it's above 40, VIX is high, time to buy. When it's below 20, VIX is low, time to go. A VIX below 20 historically has meant it's probably time to sell your positions. So, but let's look at the VIX here just to kind of further piggyback on that conversation there about VIX. The VIX, I don't like the VIX personally. I don't use the VIX. But if you look at it, here's the 20 line. Actually, you can see the 20 and 40 on the charts there. It's been down for the better part of the last 2 years, underneath 20. And historically, that means it's a VIX is low, time to go. It means a sell signal. Sell signal. Merlin, what is Corey's hedge fund, and is it accessible to regular people like me? No, it's not. You have to be an accredited investor. He's not allowed to solicit. He can't go out and do ads or things like that for his hedge fund. Gosh, I'll get the name of it for you. I forgot the name of his hedge fund, which is, it's like Stage Room or Stage Capital, Center Stage Capital, something like that. It has something musical theme to it. You have to be an accredited investor. So you have to have over a certain amount of money, and I think it's a couple $1 million in your bank account, and then you could be involved with that. But most hedge funds can't beat the market. And typically, at least from when I was looking at hedge funds, because I thought about starting my own hedge funds many moons ago, what Corey is doing in his hedge fund is a little bit different than most. It's an options premium collector. So essentially they're doing what I'm doing on a much bigger scale, on a way bigger scale than what I'm doing. And, I think that by that methodology, you can probably beat the market fairly consistently. Would be my assumption, just based off my own numbers. Patrick says, a little late, gonna rewatch what I missed, but no problem. I try to do it once a year. Like I say, last year I was disappointed. Last year I think we had... what did we have, a 19% gain last year, and I only had 16 overall. That was disappointing, and I was okay to share that with you. I was ready to face the wrath of all of you last year, like, wow, you suck. Why do you watch your show? You don't make any money. Sorry, let me just see here real quick what this looked like for last year, and I'm pretty sure. Let's go to December 30th. Yeah, so I didn't beat last year either. Well, I didn't beat last year. I beat it this year. 1 second. Let me just get real quick zoom in here just so we can get the last year. I'll leave these two lines on here for fun anyway. Let's see. That's December 30th. There's 31st. So by that line right there, green candle and the year. There you go. So now I've got them locked in. And 2023, the year of 2024, you had a rate of return of 23.46. And then this year, you had a rate of return of 24.13. Phenomenal years, guys. This will not last. I promise you, this will not last. So I missed it last year. I didn't beat last year's, unfortunately. However, this year I definitely beat it, and I was happy with that. Tilly Allison Harris was my OT instructor. Oh, awesome. Yeah, Tilly Allison's awesome. She's great. Now, I was trying to bring Tilly on the program. So here's the rule. Here's the deal. A lot of you have been asking me about different instructors. If they're a Trading Academy instructor, I am okay to have any Trading Academy instructor on. If it's someone who is selling educational services in the trading and investing space, I am not going to have them on. Main reason is my loyalty at this point is now with Trading Academy. We have gotten rid of the let's just say the how do I put this the right way? The cancerous individuals that were at the helm. And now I feel much more comfortable with the company, and I'm all in on Trading Academy. Not only for it as a business, but for the students involved with it. Just initiatives and what we're trying to do. It's going to be a process to get the big wheels spinning again, because just so many people have left from the admin side, from the development side, from our programming side. So we are. I'm extremely happy to be a part of it, and I don't want to promote other instructors at this point for different competing schools. Hopefully you understand that. And it's unfortunate because there's some people I did like. I really enjoy having them on, but given now that I am all in on Trading Academy, I'm going to hold back on having other instructors on unless they're Trading Academy. Or I can have people on who aren't selling education. You guys would not believe the filtering I have to do for this program. I have received at least... Last year, I probably got 200, maybe 300 requests from staffing agents and PR firms asking to get people on, and almost all of them are selling something, some school, some new system, some crypto project. I'm like, I've said yes to none of them. Now, I am going to try to have on Colin Teddards of the Investor Channel on next week. Justin's okay to have on. Yeah, he's not really competing with us at all. But I'm going to have Colin Teddards on. He is at CES right now, which is pretty busy. And I'll tell you what, when I first had Colin on the program, he was rough around the edges, different person. Now he just is very comfortable on microphones. He's a great presenter. He's a great interviewer. I really love the work he's doing at CES. So, yeah, no, Lori. I don't know. I need to figure that one out. I want to have him on, but technically it's a conflict of interest for me. Even though he's one of my good friends. He is a good person. I love Corey, his family. They're great people. But it's business. So we'll see. If I bring any of them on, it'll probably be that guy. Merlin, please don't feel you need to make any promises to me. No worries. I'm not promising anything to anybody. I promises get you in trouble. Are you so allowed? Steve, you could have me on. I can talk about installing pavers and fake grass. Wow, I might even have to hire you, Steve. Come out here to California. We need something that... I'll have Don on. I could have Don on. I'm okay to have Don Fraud on. He doesn't really solicit his school. We just talk market, so I think that's very different. Thank you, Jeff. I'm glad about that one as well. Does Valerian Financial... Yeah, it kind of does now. It might be it. Darren Komodo can come on, but he's so busy he never wants to come on, right? Here's the deal. Here's what's so challenging. People who have something to sell are begging to come on this show and spread their wares, right? They want to market themselves. Darren's doesn't really have anything to sell. If I have a couple trader friends who have been asking to come on for years, and they don't run a school, they don't educate, they just like to trade. And I've been trying to bring them on, and like, nah, I don't want the spotlight. I don't want to talk about it. I'm like, but come on. Those are the people I want. I want people that just trade for a living, and they're more interested in just talking about their trades, having a platform to talk about their strategies and tactics. But most of my trader friends don't want to do that. They just want to just mind their own business, be in the shadows, and no one knows their name. Whereas the people who trade and have something to sell all want to come on the program. That's pretty funny. Just watching him yesterday and just thinking if you could... bring him on. Future, you're talking about Corey? That you're talking about? I know I'd love to be half as successful as you are. I wish Well, Doggo, it's not about being successful as anybody else. It's about, honestly, don't try to say, I want to be as successful as so-and-so. You just got to go, how do I take the step to be successful? Don't benchmark yourself against me or anybody else in this program. You just got to... You got to say, okay, what do I have to do to get my game up to where it needs to be? How do I get to the point of consistency? And I shared my numbers with you today, not as a gloat, actually really to show you that I'm human in one way with this part here. Let me go back to my graphics because it worked. I think this is part of today's topic that I think is the most important. What didn't work? The big takeaway from me there is what didn't work was my gamble accounts. Going against my rules and not having a plan and shooting from the seat of your pants doesn't work. Hasn't worked for the last 2 years. It's technically brought me down. It's hurt me on my averages. So that's something I'm hoping that you guys take note of. And I know most of you do. Most of you are experienced and you understand. But some of you who are new, you've got no plan, you have no strategy, you shoot from the hip. And that one account for the last 2 years has brought me down. Granted, it's a smaller percentage of my account, so it's not detrimental. It's not like it's a catastrophe, but it still will bring you down and be it's a bad. So if you can learn from that and say, okay, I'll still keep a gamble account, but I'm not going to do it with half my capital. It's now going to be 1%, 5%, something tiny. And then work on what did work, right? Because when I look at that spectrum for the last, few years I've done this, what has worked for me, and this is why you've seen me make a shift on this program. I think if you follow me for a few years, I traded a lot of futures, I traded a lot of equities, and now what I'm noticing is I feel personally, this is not talking about you, this is me, I feel personally like I'm a much better trader when I look at the end of the year and my win percentages are 95%, 95%, 98%. These are great win percentages. Even though those gains aren't astronomically large, they're still, beating the market. But that 98% or 95% win rate is just it's incredible in my mind what it does psychologically and makes you feel like a winner. Whereas if I looked at my futures account, which still had my futures account had a better rate of return than my 1% options account. Let's put it that way. Let's just make that clear. My 1% options account that's conservative is 19.05%. My futures was 33%. Yet, in the futures account, I feel like I failed because I was only right 61% of the time. So it's a psychological burden that I'm carrying with the futures account. Even though I did well, I still feel like I don't want to trade my futures account that much anymore. Now, of course, I will. I'll continue to trade futures this year, and we'll see. I'm going to keep track of my numbers, and as those numbers get better or worse, we'll tailor those strategies as needed. But part of it is what's working for me is being a seller of options. And I made a big change this year. I would say the change came about mid-year, and I have not broken that down, but I can tell you off the top of my head because I've been watching the numbers. The change mid-year was, actually maybe the last third of the year, was moving from monthlies to weeklies. So in the 1% account, I still do monthly options. In my aggressive options account, I'm doing weeklies, and I'm getting better rates of return. I mean, especially with some of these high-flying, crazy ones, you can get a really pretty attractive rate of return for a week. I know some of you in here, we were talking about last week, you get like a 5% rate of return on something like MicroStrategy for a week. I'm going to shoot, you could sell at the money calls and get like 8% for the week. But that's, of course, very risky. Lori said, I love selling call options and always do much better with them. Yeah, and I think a lot of it has to do with the success ratio. There is a psychological, support unit there in having winning trades. So there you go. So I talked about what I'm changing for 2025. I'll be honest, I'm not changing much. I won't be adding to my gamble account. I'm going to focus more on my 1% options. Granted, I had one, it was up 19, and one was up about 24%. That was great. Those are really good for me because my target for those 1% accounts is 1%, meaning I should get 12%. Now, in a really strong bullish market, I'm going to underperform most likely, which I did. I pretty much tied the market in one of the accounts, and in the other one, I missed it by a few percent. We'll see what happens if we have a down year. I'm hoping we have a down year so we can see what these numbers look like in a down year. Right? I would love to have a market year that's down 5, 10%, and my account's still up. That's the ultimate goal, right? Because if I don't have a drawdown, I don't have to work as hard to get back. When you have a retirement account, 401k and IRA, and you lose 30% of your account, or let's say you lose 50% of your account as the markets may drop at some point. If you drop 50%, I have to get 100% rate of return to get back to even. Whereas if I can just not lose any of that 50% and stay zero, then all of a sudden my upside potential is significantly higher, long-term compounding. All right, let's see. As long as the 2% of the times you lose, you don't crater the account expectancy. Yes, absolutely, Steve. And that's with these option strategies, I'm not putting myself in positions for cratering accounts. In the 1%, right? In the 1% account, definitely not taking those big risks with broad market indexes. In my aggressive options, and that's how I'll call them now. I'll have conservative options and aggressive options. In my aggressive options account, I haven't had the big stinger, but it could happen, right? If MicroStrategy implodes and all of a sudden it's a fraud, an FTC investigation, whatever, and it drops to $10 per share, I'm going to get smoked. I'm going to get hit hard on that one. And knock on wood, let's hope that doesn't happen. But is it possible? Sure. Anything is possible, which is why most of my money is in the 1% accounts, which will not have the 60% rates of return. Those conservative accounts, I don't want to take those kinds of chances. 1% a month, I think I can do without taking big chances. All right. Steve says, my option account is much more successful than my futures account. I'm pretty much doing all options, right? And so there's success measured in multiple ways. The way I presented it today is I have my win percentage, but I also have the profit percentage. Obviously, the end day result is your profit percentage, right? You want to see the numbers, your gains. But I do like seeing the win percentage as well. Makes me feel better about my trades, my decisions, and we'll see. I mean, maybe next year I'll get the 100% account where I don't have one losing trade for the year. Although I think it's going to be down, so we'll probably have some losing trades along the way. Okay, so I put this out here for all of you. Here is the S&P. So I now have a spreadsheet that has the S&P and Bitcoin's numbers for the year. I hope Mark Jansen's right. He says, but ending at 298,765. Love it. 218% gain. We will see. And then I have some people that hate it. There's 5 people that did for the S&P that I didn't get your numbers for Bitcoin, and that's Farm Bees, Oscar Fernandez, Dwight Freeney, Daryl Kimbrough, and PBJ. I didn't get your Bitcoin quote there, so I have you down at the bottom. But most thinking up, I've got Jeff, who's here with us today. He thinks it's going to be a pretty big down year, 25% slide. Janet thinks it's going to fall 41%. And Dave Cordell thinks 57% slide for Bitcoin this year. We shall see. Who knows? Most are fairly ambitious. And then for the S&P, you know, you look at here, I've got what appears to be about 10 or 11 people that are bearish on the year. Ed up in San Jose, who just sent in his quote. He's usually pretty bullish. Ed, good to see you. He's our most bearish so far at negative 13.67% for the year, closing at 4818.62. And then you go above that, we've got about 30 people that are in the bullish camp. The most bullish so far, which is Lisa, which I think Lisa wants to change this. Don't you, Lisa? I think you want to do this. You want to change this one. You mentioned 8,000 is your forecast for the S&P. That'd give a 43% gain. Not that it's impossible, but I have not done the numbers. Someone mentioned this. I can't remember where. I've been talking so many different places on trading and investing. You have 2 years in a row with 23, 25% gains. And now you want to have it again? Man, I think the odds of that get exponentially lower and lower and lower. The more that you have this up, ultimately you'll probably start to have some down years. So we'll see. I did give you a much lower number. Okay, well, put it in again, Lisa. I'll change it right now. Put it in there. And for anybody here who might be new and not wasn't here the last couple of days, you can type it in the chat, your S&P quote for the end of the year, and SPX is what I'm using, and also Bitcoins, which is BTC USD. Those would be the numbers I'm looking at for putting on this list, and I'll give us another week or so before I tie it down. Yeah, I need to get Larry on the program. I need to get Todd on the program. I need to get other Trading Academy people on here, so it's not just me all the time. It's like the Price is Right, edging out the next guy. Yeah, I know. I'm kind of... it's funny, if you look at my numbers here, I'm like right in the middle. So I'm just in this slight down. I got 54.41 is my number for the S&P. But if you look at Bitcoin, you know, I have I think we're going to see an up. Most of the year is going to be up, and then all of a sudden I think it's going to kind of sell off near the end. Here's mine is 169.5, and I'm like right in between people. So I'm sandwiched at that 80% rate of return for the year. We will see. Aren't the gains rate related to the rate of inflation? No, not necessarily. Good that you marked that chart. Anybody else want to add their name to this list? Feel free. Just let me know, and I'll type it in here, or you have last-minute modifications. You know, as time goes on, I'm sure some of you are like, hey, I can still make changes real quick. Let's do it. All right, let me go and look at your forecast. Oh, let's go to, where am I at here for my losing track? Oh, I need to go Forex Factory. That's what I was looking for. So you have some really big news for tomorrow. Let's start with that, and then we can wander down to other topics. But tomorrow is officially earnings season kickoff. So I'm pretty excited about that. And let's see here, get trading in my earnings calendar up for you guys. It is, I'm listening, Lisa. I'm all ready. Here's your earnings calendar for tomorrow. You can see today we had some smaller ones. We had Infosys report. Well, supposed to report, but they did not. And of course, the market's closed. Tomorrow, you have big names. Why am I? Did I miss something? Was it Wednesday? I could have. Maybe I'm just in my head. I'm losing it. Maybe it's next week we have their earnings. I could have sworn it was this week. All right. Well, I will just never mind. Just scratch up your record. It's next week we have the earnings seasons kick off. You have Constellation Brands on Friday. You also have Delta Airlines, and that's pretty much it. Walgreens Boots Alliance, WD-40. Not the best. Read this, SPX 6977. All right, Lisa, there you go. Let's put it on there right now, and we'll get that number added to the list. Don't want you to have the wrong number on this. So we'll go 6977.50. And Tofi, you already changed your number. Come on, man. You can't keep changing. All right, Tofi, I'll let you change. You just dropped by 2,000. All right, I'll let you slide there, bud. Let's see. Who won the 2024 contest? That was Les Gold out of Cape Canaveral, Florida. I still have not mailed a present out there yet, Les. You got to give me a day or two. I'm so crazily slammed with just many, many different projects right now. I feel like I'm losing my mind. I got just so much stuff going on. Mamon won 6470, and if you notice there, Mamon, you're already on the screen. I got you on. If you emailed me, I got it. If you put it down below any of the YouTube channels, I already got it. But I will definitely get new people on there. By the way, I was told by a friend of mine who may be here with us today that the row on the airplane you don't want to sit on is row 26. And it was funny, flying back from Charlotte, my flight was row 26, and it was a Boeing, and I was like, oh God, I'm going to go down. I'm going down. Airlines should have a record year. Yeah, I think they'll probably have a pretty, I don't know about record. I think they'll probably have a pretty good year. So here's your earnings count. Let me real quickly check because I feel like I'm losing my mind here. I could have sworn that it was the big kickoff for earnings season. I must be losing my mind. Let's go back to Wednesday of next week, the 15th. Okay, so here's Wednesday of next week. Maybe that's what I was referencing. Wednesday next week, you have JP Morgan, BlackRock, Wells Fargo, Citigroup. So that's your official kickoff. I don't know why I thought it was this Friday. My apologies. I'm losing my mind. I'm getting old. Frazzled. How about Delta Airlines, DAL? It has been a pretty wild jump for them to the upside. This is Larry's favorite airline is Delta. Here's American Airlines, which I was flying on. Not the best looking chart. There's some room to the upside here, potential for American. And then here is the one who I don't like, United Airlines, as a company, not as a stock. So their stock has been absolutely fantastic. United Airlines, by the way, back in August of last year was at $37, and now you're at 103. So taking off would be an appropriate cliche for United Airlines. You live close there, Chris? Nice. I was nice. I didn't mind Charlotte. It was funny. I was out there with Larry and a couple other training academy instructors, and we were coming back home, and one of my bosses was there, and he's like, "What'd you think of Charlotte?" I said, "I'm writing a letter right now to the city of Concord, to the mayor, to talk about what an embarrassment this city is from a social planning perspective. You cannot walk anywhere in Concord. Concord has sidewalks that dead end into the median of the road, and there's grass and mud. There's no buttons on the street corners for you to cross the street. It's like a total circus for pedestrians out there. Mind you, it was 20 degrees, freezing and windy, and you couldn't cross the street. I felt like playing an obscene game of Frogger in Concord because I was walking everywhere. But anyway, other than that, yeah, I love it out there. Beautiful. I just wish it wasn't as cold as it was. And yeah, good experience anyway. And by the way, I'm going to go 1 hour here today because I had one last little graphic that I wanted to share with you. Training them young. This is something that came to my mind when I was out in Charlotte. Out of this room, there was like 260 people there. There were, I believe, about a dozen children under the age of 18 in attendance, taking classes on real estate and futures and options. And I had a 17-year-old in my cryptocurrency program, and it was like, maybe like get all mushy and feel great because now, as I think as society understands the importance of financial education, you have entities like Trading Academy and other financial education firms that are trying to teach you how this stuff works. And man, I can't imagine how different my life would be if there was actually organized education in financial markets when I was a teenager. It wasn't there. And not even in college could I get it. Now you can go take all kinds of workshops and seminars to get better. I think a lot of people are snake oil salesmen trying to give you false claims and expectations. But the fact that these kids are in that room, I took a moment to single him out of my class and be like, listen, I hope you understand how special this is for you, because you're 17 years old and you're now taking your weekend to do a class on cryptocurrencies, which I think is a very important asset class for the future. I go, most of your peer group is out chasing girls right now, or down by the river drinking or doing something stupid. It'll just turn out to be an experience for sure, but not going to financially benefit their future in any way, shape, or form. So having a lot of young people in the room was really refreshing and good to see. And I guess a lesson to all of you, if you've got a young one. I'm not saying this young. I mean, this was a graphic that AI made for me, and that's a pretty young picture. That might be a little too young, but certainly start them off on that path of understanding the value of money, capital appreciation, compounding interest, and the value that money is going forward. Steve says it's funny because my kids and their friends in the markets are 22 and younger. Nice. Good for you, Steve. I mean, hey, hats off to you. I think everybody here, without question, every single person in this room would go, man, I wish I understood this stuff when I was a teenager or in my early 20s, right? Most of you probably got started in your 30s, maybe your late 20s, maybe your 40s. Some of you in your 50s just getting going. I know it's an hour show. Big Eb's not here. That's why I can do it. Big Eb and Tom Barr not here anymore. So on a Big Eb will be back. I think I did something to upset Tom Barr. It's probably because I refused to admit that Tesla was a car company. It's a technology company. Michael, bring OTA back to Charlotte, please. It's on the program. It's on the schedule. You know, we have a lot of work to do to get things back up to where they were. Unfortunately, you had a lot of, we would just say, a sequence of unfortunate events, and more importantly, unfortunate people who had conflicts of interest, greed, and who were more out for themselves than anything else. So, we will, I hope, have a center back in Charlotte at some point in the future, and we would definitely like to expand more and more and more. But it will take some time to get there. So keep pushing, keep asking. And, you know, if you're out in those communities where you think you want a center, keep pushing. You know, if you can do a meetup and start building it that way, then maybe we can end up putting a center out there. But, you know, there's a massive capital outlay to do physical. You notice a lot of these companies that do financial education, it's exclusively online. It's only online. Look, this is fun. I enjoy doing this. This is free. So obviously we remove that cost barrier. It costs me money to do it, but it's okay. It's not a lot. But, you know, how much more fun do you think we would have if this was a regular class, physical, where we could all meet on a day-to-day basis and high-five and share stories and eat lunch together? That, to me, is what separates Trading Academy from just about everybody else, is that kind of physical environment, that physical community. And I know some of you lost your local centers, which is unfortunate. Outside of my control, I will be doing my best to get this company back up to a point where we can actually expand and start putting centers back in cities, because I love traveling, I love teaching, and looking you guys in the eye. Like right now, I'm staring at a monitor with myself on it and a bunch of buttons. When I can stare you guys in the face and see if you're getting it or not and how things are going, that's a way better process. I love it. Absolutely love it. All right, sorry, let me read these last minute questions here. I wish I had learned this before I turned 65. Me too, Lori. Man. And it's, you know why? Because Lori's having so much fun doing this now. You know, she's in her 60s, she's 65 or more, I know that. And she's enjoying doing it. Imagine how much different things would have been if you did learn this in your 30s, right? So if you got someone who's younger, share, at least bring them to this podcast. Merlin hates the Chiefs. No, I don't hate anybody, honestly. Actually, I do hate some people. I hate some people. I think some people don't have a place on this earth. Yeah, absolutely. And I watch a lot of like 2020 episodes, and man, some of these people just deserve to just put on an electric couch and let's just take out a whole group of them together. You'd have no business being on this planet. It should be a privilege. You should be honored to be here on this planet right now. So, yeah, I try not to hate. I try to be more understanding and accepting of people, although there's a couple people I really have a strong dislike for, as you know. As far as sports teams goes, I like to talk trash in sports. So I'm a Giants fan, San Francisco Giants, so I love talking trash about the Dodgers. And as far as the Chiefs go, the reason I hate the Chiefs is because they always freaking win. I mean, Patrick Mahomes, you give him another 5 years, he's going to be heralded as the greatest quarterback to ever play, which is fine. He's fun. He's entertaining. You know, Tom Brady, I always found just annoying and pretentious and cocky and just arrogant. Not that you know, the Chiefs quarterback is any better, but he's just a phenomenal player, and he always ends up beating my team. Twice he beat me in the Super Bowl. Dang it. I see here in Don Front as well. Who are we talking about? Let's see. Lori's killing it. Yeah, good. You're 70 now? Good for you, girl. Absolutely, good for you. The in-person class is so much different than, for some reason. We know the reason it's different is I can see when you're not getting it. When I was doing the crypto class in Charlotte last week, I could look over and right away I saw the blank stare. I know the death stare of disappointment when someone's just going, and you know they have no idea what you're talking about. And that's when I can stop and go, all right, hold on. Let me back up. Do you understand this part? And I'll go, yes. Do you understand this one? No. Cool. Let's explain that, right? If I go through, when I go through a class here, I just keep going, and you're experienced enough at education, I can sense that you'll ask me questions, you interject when you want clarity. You have to do that in an education forum. Sometimes people are so quiet and shy, they just don't want to talk. They don't want to embarrass themselves by asking a question. And my mantra always is, I'd much rather you ask a stupid question than correct a stupid mistake. All the time. So, still riding the World Series high. Let's go Dodgers. Enjoy it while you can, Oliver. You know you're going to choke again soon, just like the Dodgers always do. All right. That's going to do it for me, everybody. We went through your economic calendar. Or no, we went through the earnings calendar. Let's talk about your economic calendar for tomorrow, which is a good one. We do have unemployment rate coming out tomorrow. That's the wrong slide. That's the all-important one. The all-important unemployment rate. They're expecting it to stay at 4.2%. There is a lot of chatter about unemployment starting to look a little bit worse. So let's see how this turns out. They're expecting a big drawdown in non-farm employment change, which, as you guys see on the screen here, that's a loss of 60,000 jobs over last month on the non-farm employment change. However, unemployment rate stays the same. I don't know. Something seems amiss here. Here is your unemployment rate, and I'll zoom in until after the COVID pandemic piece. You look, it's been creeping up and ticking higher, ticking higher. We shall see what those numbers are. It will create some waves in our market for sure, and that's going to happen before the market's open, 1 hour before the market's open when you get that one. And there you go. That's your number for today. All right, that's going to do it for me, everybody. Again, if you are new, hit that subscribe and like button. If you have not put in your forecast for the S&P or for the Bitcoin contest, I'll give us a little bit more time for that. But give me your spot price of what you think SPX will be at the end of the year, as well as Bitcoin's spot price. And I'll put you on the list and send you some prizes at the end of the year. I got to redo the prizes here because I'm out of shot glasses, but that's what you're going to be getting. All right, everybody, that's going to do it for me. Thank you so much. If you have questions or you want to email me those numbers for S&P and Bitcoin, put them into the email at tradermerlin@gmail.com. I will see you all tomorrow. Enjoy your first official 1 hour and 7 minute show for 2025. I'll see you tomorrow.